Hello everybody and welcome back to the channel, and today's top 5 video that is going to focus on some streaming related services companies.
Your confusion is not rational. She's a healthy female of breeding age.
We have selected 5 for you that has all done relatively well over the last year. The first one you can see has netted 11.12% over the last 12 months. This is Comcast. It's not a traditional streaming known company, but during 2020 they launched their streaming site, which is called Peacock, and that had massive growth from the beginning. The price today of Comcast is $49.98 a share, and the market cap is $229 billion. Then we have Disney, very known company, obviously also big in other areas. Some of them are the parks that they have around the globe. Disney has obviously been struggling quite a bit due to the closure of parks, but they also in the end of 2019 launched their streaming service Disney Plus, which has also had explosive growth over the year, and it is also expected to continue this trend during 2021. The price today is $178.44 a share, and the market cap of Disney is $323 billion. Then we have another well-known company, Netflix, which had a very good 2020. It gained 58.27%. The price today is $520.8, and the market cap is $230 billion. Then we have ROKU, which obviously did really well over the last 12 months. It has gained 161.04%. The price is $335.18, and the market cap is $43 billion. Obviously, Roku is an alternative to traditional cable TV, where you can stream various channels for free and their own channels, and you can also pay for subscription-based channels like, for example, Netflix, Amazon Prime, whatever it may be. Finally, we have the one who gained the most over the last 12 months, 179.16%, and you may not have heard about this company because it's relatively small. That is FuboTV. The price is $27.33, and the market cap is only $1.8 billion. And as you can see, it had a massive growth towards the end of the year, for thereafter falling completely down, and in the past days it has recovered a little bit. The difference between FuboTV and the others is that it's solely focused on streaming of sports events. So it's kind of like a niche player so forward, and it's again trying to be an alternative to cable TV in the sense that here you can stream all the sports that you want based on a monthly subscription fee. So before moving into the numbers, as we usually do, we thought for this type of service that it would be good to take a look at the subscriber development over the past period for each these type of service.
Thanks for the tip.
So if you see, Netflix in 2016 had 71 million subscribers. Today they have 198 million, and they still expect this to grow, albeit at a lower scale. Then you have Disney here, which launched in the end of 2019, Disney Plus. It had 28 million very fast. In Q3 2020, it went up to 76, and in the end of Q4 2020, it had 87 million subscribers. So again, huge growth for Disney, and for them specifically, we have an expectation that this will continue to increase significantly over the coming years, as this is something that should be very attractive to many people to have, especially people with kids. Then you have the Peacock one that we mentioned from Comcast, which was released in Q3 2020, and it was free at the time, got huge masses already with 22 million. They have 26 million as of today, and they expect over the next 4 years to take this to at least somewhere between 35 to 40 million. Finally, we have Roku here on the yellow one, which in 2016 had 13.4 million and today has 46 million subscribers. And again, we expect this to continue for Roku. They look very interesting to us. Finally, we have FuboTV over here on a separate chart. We just decided to do that simply because it is much smaller than the other one, so it would not really make sense to put them in the same graph. And as you can see, it had around 230,000 subscribers in 2018, and that has now gone up to around 500,000 subscribers. So again, compound annual growth has really been tremendous for them. But of course, they are still a lot smaller than the other companies that we are benchmarking them against. Finally, we thought it would be interesting to see the percentage share of new subscribers in the US. And as you can see, in the 3 months from September, Peacock, which is a Comcast one, took 17.2%. Amazon Prime, which we do not have here, took 16%. HBO Max 11.3%. Hulu 9.5%. Disney Plus took 9.1%, so still quite good. Netflix 8.3%, also respectable. And then you had Apple TV, who were the one doing the worst among the companies that is listed here, took 4.9%. So Peacock has really gained some interest, and it's quite interesting to see that Comcast, which again is a traditional cable company conglomerate though, has managed to do somewhat of a transition over to their new streaming services. So first, as usual, we move into the income statement, and we basically want to understand whether these companies are earning any money in the end of the day. So if we look at the net income for the last 12 months, we can see Netflix 2.8 billion, really good solid number. Disney is down with 2.8 billion. This is definitely not due to Disney Plus, but due to, among other things, having to close a lot of their parks, having to lay off people around the world. Disney has been struggling in connection with the coronavirus, but this is only a temporary thing, and this will definitely look different once the vaccine starts to pick up and the world basically opens up more. You have Comcast here, solid number, $10 billion, quite okay. Roku, as you can see, minus $100 million, so that would be kind of like a first red flag for them. However, what is very important to note about Roku was that they turned profitable in the recent quarter of 2020 Q3. So again, we expect the same for Q4 2020 when these numbers come out. So you therefore need to take this loss with a grain of salt, because Roku is in a transitioning from being non-profitable to become profitable. And lastly, you have FuboTV, which lost $421 million, which is obviously quite a big red flag. Again, Fubo is a growth company, as you will see later. So these numbers needs to be taken into perspective. But it is a huge loss, and it could have some potential consequences if this continues over the next years. If you look at the net profit margin, by no surprise, Netflix doing the best, followed by Comcast. Disney doing relatively okay compared to the situation, similar with Roku, which again was profitable for the most recent quarter, and Fubo has a massive loss. Again, no surprise, and it needs to be taken into perspective of that being a growth company. We can also look at the B/M score, which is just a mathematical model that determines whether a company has manipulated its profit. We want this to be below 2.22, and it's looking fine for the ones where we have and where it makes sense. Roku a little bit less than what we would like, but it's not a huge concern to us. Then we have the Sloan ratio, which identifies if a substantial parts of earnings are non-cash accruals, which we're not interested in. We want this to be between minus 10 to 10%. It's looking well across the board, with the exception of Fubo, which has a high minus 44%. So this is a red flag for us, but it's not something that will be the decision factor to us in the end, but we will have to understand this number in a bit more detail. So again, in the overall comparison overview, we looked at the trend for the stock first, and basically Netflix, Disney and Roku is still in what we would consider an uptrend, while as Comcast is going more sideways. Fubo, because of the huge increase it had and the subsequent big drop, and now in the recent days it had a big increase again of around 25%. We just want to say this is not clear, because the stock is clearly very volatile and it can go in either directions. It is not clear as of today. Then we have the income statement part, where Netflix and Comcast were positive. Roku just turned positive in the recent quarter. Disney is negative, but this is temporary, and FUBO is also negative, which hopefully will be a transition phase while the company is growing. This is also reflected in the net profit margin where Netflix and Comcast were doing the best. We then move into the return section, and we want to understand how high returns and cash flow margins is being generated by these companies. It's very important to us to look at the return on invested capital here. Netflix doing the best, followed by Roku and CMCSA. Disney doing respectable, although a minus on 2%. And obviously FUBO has a big minus on 93%. Compared to the industry, all of them are actually doing fairly poorly. If we look at the levered free cash flow margin, we can see that Comcast doing the best. This is quite okay for them, we would say 12%. Netflix disappointing us a little bit with only 3%. Disney doing fairly well given the situation with 5%. Similar with Roku, which we expect will be much better in the next 12 months. And FUBO again doing by far the worst, but there are good explanations for this. We then move into the balance sheet and ratios, and here we want to understand how strong the financial position is of the company. So if we take a look at the current ratio, we would like this to be above 1, and as we can see, all companies with the exception of FUBO is doing fairly okay. FUBO is a little bit bad here with 0.23. Similar with the cash ratio for the short term, we want this to be above 1. Netflix doing fine here. Small concerns with Disney and Comcast. However, this is more capital intensive companies, so maybe they don't want to have as much cash on hand. They want to put them out for good use. So again, we need to take it with a grain of salt. Roku doing really well here with 2.25, and FUBO not well with 0.16. And again, here you can see that the total cash and short-term investment that they have is only on $29 million. And when you hold that up against the loss over 2020, you will start asking the question whether FUBO has sufficient capital to grow the business or basically cover their losses. And this could be an indication that FUBO needs to go to the market again and ask for more money. So this is something that you need to be wary about. Are they going to raise equity and basically dilute shareholder value? Really important to keep this in mind. Then we can look at total assets versus total liabilities. We want this in general to be above 1.5, and it's looking fairly fine across the board. Roku again doing the best together with FUBO surprisingly on 2.75. The debt equity ratio, again, we would like this to be as low as possible, but still for all companies it is looking fine. Again here Roku and FUBO are doing the best with 0.07 and 0.05. The Altman Z score is a credit strength test that assesses the likelihood of bankruptcy, and we want this to be above 1.8. And it's looking fine across the board with the exception of Comcast. However, Comcast we are not too worried about overall. However, when you look at FUBO, 1.25, there are some small alarm bells ringing, also considering the losses that they have and the cash that they have on hand. So this is a small, I wouldn't say a huge risk, because we still believe that they will, have the sufficient funds, either raising more equity or taking debt on hand to continue the growth and at some point become profitable. But you need to keep in mind that it is a bit more risky than the other ones. Roku extremely well here, 29.67, so again, no worries about them. The Piotrowski score is another way to assess the strength of the company's financial position, and here Disney and Roku surprisingly are not looking too well. Again, we don't have any huge concern, and again, we like the Altman Z score more than the Piotrowski score, because the Piotrowski score only look at the last 12 months. So again, looking overall, we are fine with the exception of FUBO. There are some reservations in regards to their financial strength. So again, back to the overview, we looked at the return on invested capital where Netflix was doing by far the best, followed by Roku and Comcast. On the levered free cash flow margin, Comcast doing fine. Similar with Disney, quite surprising there, that was good to see. And similar with Netflix was actually also quite okay. FUBO again, by far doing the worst. On the total ratio, FUBO was doing the best, followed by Roku, and we saw the same situation on the debt equity part. We then move into the shareholder yield, and we basically want to understand how much value is returned to shareholders either through dividend and or buyback. And here there's two important things to consider, and that is definitely that Disney has suspended their biannual dividend. So you need to keep that in mind. Usually Disney's dividend is going to be higher, but because of the dividend suspension, this has dropped. So again, very important. There's no clear indication yet as to whether this will be resumed or not from Disney as far as we can see. So keep that in mind. Comcast, on the other hand, has a dividend yield of 1.8, which is quite nice. And as you can see, the dividend growth rate has actually gone up with 11% over the last year. So if you're a dividend-oriented investor, Comcast may be a good option for you. Besides that, on the buyback yield, all companies, with the exception of Comcast, has had to issue more shares. And as you can see, FUBO here minus 5.3%. This was what we talked about a bit before. This is one way to raise more equity, dilute shareholder value, and you therefore need to be conscious about this. Next, very important section, the earnings per share and growth for the next year. We can first look at the P/E ratio of Netflix and Comcast. Big difference. Netflix is still seeing a bit more as a growth company compared to Comcast, of course. But benchmarked against the industry, all of them has quite attractive P/E ratios. The other ones have negative P/E, so we cannot assess that. That is basically 0. If we look at the earnings per share as of today, it is 5.91 for Netflix and is expected to go up to 9.05 over the next year. And the EPS growth forecast over the next 5 years on a compound annual growth rate is 41%. So significant expectations that Netflix will become more profitable. Similar, Disney is expected to become profitable again, and they are also expected to have huge growth forecasts for the next 5 years, which is perhaps a bit more return to the normal compared to Netflix. If we look at Comcast, a bit more modest, but still a 6% growth, compound annual growth rate in EPS over the next 5 years. So again, something we would consider realistic for a company like them. ROKU, earnings per share forecast for the next year is actually still to be minus. We would doubt this. We think they're going to continue being profitable. So we are a little bit reluctant to say that we 100% agree with the number from our sources, but this is what they're conveying, that over the next year, EPS will still be negative for ROKU, and similar for FUBO, which is no surprise to us. When it becomes interesting with some of these companies is when you start to look at the revenue growth over the last 12 months. Netflix, really good growth on 26.19%. Disney, no surprise, they've had to close your parks, etc. There's been a lot of postponement of movies, so their revenue has been hit by this, but minus 6% is not that bad, we would actually say. Comcast also a minus on 3.82%, so something to take note of. However, with the introduction of Peacock, they may reverse this trend and the revenue may grow in the coming year. ROKU, again, they have just turned profitable, but look at the revenue growth, almost 55%, huge increase, and that's something to take note of, and that's one of the reasons we really like the company. And similar with FUBO, 1,800%. So again, huge revenue growth, obviously from a smaller scale than the others. But when you see some of the poor numbers that we have seen from FUBO in terms of earnings, in terms of the cash balance, they need to at least demonstrate that the revenue is growing significantly. And similar on the net profit growth, Netflix 98%, really significant good growth. We really like Netflix, so again, it's not a huge surprise to us. Disney has been impacted hard, no surprise. Comcast has also been hit, potentially because of the revenue decrease as well. Okay, ROKU, growth of 168%, really good. Again, going from being non-profitable to become profitable, and we expect this to become even better in the coming years. And FUBO, 2,045%. So again, this is the numbers that you want to take away from FUBO. That is, okay, they may not be profitable right now, but the revenue is growing significantly. We also saw that with the subscriber count earlier in the video, and they are still becoming more profitable. They are not profitable as of today, but they're at least decreasing the negative results, and that's the way we want to go. That's the trend we want to see from them. Back to the overall overview, we looked at the EPS growth forecast for the next 5 years, and both for Disney and Netflix looking really well and relatively solid for Comcast. On the revenue growth, FUBO and ROKU looking extremely well. And this is what you need to take notice of with these two companies. Netflix also doing quite well with around 26-27% increase. On the net profit growth, FuboTV and ROKU again doing by far the best. And again, this is what we want to see, at least when we benchmark FuboTV's others numbers. They need to become more profitable. They need to grow their revenue because the other numbers are a bit more weak, as we would say. And Netflix, again, has also had really good net profit growth of almost 98%. And this is something that we hope will continue going forward. Finally, we basically want to understand whether these companies are currently under or overvalued, and one way is to look at the PEG ratio and Peter Lynch fair value. And according to that, if it's below 1, it means that they are undervalued. If it's above 1, they are overvalued. And for the ones we have the numbers for, which is Netflix and Comcast, both of them are overvalued, but Netflix actually not as significant as what we would expect, but still overvalued. Our own estimated intrinsic value, which is based on a lot of different numbers and assumptions, what we see is either an upside and downside with these companies. On Netflix, we still see from today's price a downside on 4.23%. Disney, we see a larger downside on 17.51%, and we'll come a bit more back to that later in the video. Comcast shows an upside on almost 11%, which was a little bit surprising to us, but that is what the numbers are telling us. ROKU, an increase of 5.05%, and FUBO by far with the highest upside on almost 29%. The beta ratio obviously shows the stock's volatility in relation to the overall market, and as we can see, Netflix, Disney and Comcast are not that volatile, while as FUBO with 2.83 is extremely volatile. And that was also something we saw with the share price, which had gone up very fast in the end of last year, for thereafter dropping completely with taking 50% off. Another way is to look at the book value per share, and here in this situation, if it's above 1, it means that they are undervalued. If it's below 1, they are overvalued. And as you can see here, by far all of them, with the exception of FUBO, is actually overvalued. FUBO is around 1, so it should actually not have been overvalued. This should just have been neither under or overvalued, to be honest. We can also take a look at the relative strength index for the last 14 days. We want that to be below 30 because it means it's oversold and it may go in an uptrend, while as if it's above 70, it's an overbought territory and it may do a pullback. All of the companies are relatively in the middle. Disney is moving towards overbought territory, which is kind of like aligned also with our own assessment that Disney seems to be priced a little bit high. But for all the others, there's no clear indication whether they are in overbought or in oversold territory. Finally, we can take a look at what the analyst thinks, and we do not follow them blindly because they sometimes have their own agendas, but we think it's always interesting to benchmark them against our own numbers. So if we look at the consensus price target, which is the middle ground of all the estimates, some analysts will have higher, some will have lower. Basically, they see a small upside on Netflix on 3.31%, so a bit different from ours. They see a downside on 11.34% on Disney, so relatively aligned with us. They see a small upside on 1.18% on Comcast. We see a bit higher. ROKU, there we are disagreement with them. They see a downside on 24%, and we actually see an upside of at least 5%. And FUBO is relatively similar. They're a little bit more bullish on them with 47% upside, and we're a little bit more reserved based on the numbers that we are seeing from FUBO, but we still believe that they are undervalued. So that takes us to the overall value assessment of each company, and basically we believe that Netflix is fairly valued, Disney is overvalued, Comcast is slightly undervalued, ROKU is relatively fair valued, maybe a little bit more undervalued than overvalued in our opinion, and then you have FUBO, which to us are clearly undervalued as of today. So which one of these is our top picks? What is the verdicts on each of these stocks? Well, if we take a look overall, the known names may not be the best, at least for the short term. If we look at Netflix, overall really solid numbers that is expected to become even better in the future, and we think they're a great buy for the long term. Netflix is continuously developing new content, and they're still growing their subscriber base. It may be flattened out a bit, but it's still increasing, and we think Netflix long term is still going to be a solid hold. It's really difficult for people to get rid of Netflix once they are inside in the product. Then we have Disney. Despite an overall challenging year, Disney still went up with 11%, and we do not see much more gain with them right now, even if Disney Plus is continue to growing, and even if the vaccine starts to roll out and the world basically opens up. It's quite interesting to see how hard Disney has actually been hit by the coronavirus, but despite that, the share price has still gone up considerably with 11% year on year, and that's why we feel that it's a little bit overvalued as of today compared to some of the others at least. Then we have Comcast. For us, they are a bit more the safe place. They will not be going too much up. They will not be going too much down. What we like about them is the introduction of Peacock, which has seen a great increase in subscriber base. They do not expect huge increases going forward, but still, it's good to see that a conglomerate like that is still thinking in new ways and not just sticking to the old routine, because in the end of the day, at least for us, we believe that cable TV will be phased out as we move ahead in the future. More and more people will move to subscription-based stuff like these. Then we have ROKU. Overall solid numbers with great revenue growth and profitable in recent quarter. We do not see a huge upside as of today, but we would still say that they are relatively good buy, and we wouldn't be too concerned adding them to our portfolio and hold them for the long term. However, it would not be our necessarily first choice. Then finally we have FUBO, and they're definitely the risky play, but we like it. And if the fall that has just happened over the past weeks continues, we will definitely move in with a considerable amount. It is a risky play. There's no guarantee that FUBO will be successful. However, what we like about them is that they're streaming sports, so they are kind of like standing a bit out in the crowd. They appear to have good growth in their subscription base. We think this is again something that will happen. People will go away from cable TV, and for a lot of people it's important to have something around sports. So if you provide the best model or best streaming site for this, you should expect to be able to attract a lot of people, and that's why we think FUBO is interesting. They may actually even become an acquisition target for other streaming sites in the future.
Crush your enemies, see them driven before you, and I hear the lamentation of their women.
But it is a bit volatile recently. We're not 100% sure whether it's good to jump in now or not. Yesterday it went up with around 25%, we believe. So again, it just shows how volatile it is, and we want to wait a little bit before we make our move. But we definitely see FUBO as an interesting stock, and we see it as being interesting for the long term. This was all we had for today. We really hope you enjoyed this video. Please subscribe for future content. Please give us a like, it really helps with the algorithm. And please provide a comment in the comment section. As usual, there's probably something that we have missed that you are aware about. So we always appreciate to get your input, and that will also help other people that are subscribed to the channel or watches this movie. That was all we had for today. We really hope you enjoyed this video. Please stay safe. Hasta la vista, baby.